Hey everyone, and welcome back to a portfolio update. So as you can see, year to date the portfolio is down 6%, whereas the S&P 500 is down 4.65%. Now, during the day, portfolio went green, then red when Jerome Powell started to speak. So when you rewatch this video, a lot of things can change. Now, over the last month, the portfolio went up over 18%, whereas the S&P 500 went up 10.79%. Of course, a big increase since that Liberation Day crash. And over the past week, a small outperformance. We're up 1.11%, whereas the S&P 500 is up 0.77%. And so in today's video, I just want to talk a little bit about the portfolio and a couple of earnings reports that you might have missed and that I haven't covered, such as Walt Disney, Celsius, Amazon, and some other portfolio related news. All right, so I'll first start with the portfolio update. Well, a portfolio update, there isn't really that much to say. A lot of the companies have already reported their quarterly figures, such as SoFi, PayPal, Alphabet, Uber right now as well. Intel, Meta, AMD, Tesla have reported, Celsius recently reported, and Palantir as well. You might ask yourself right now, what is Palantir doing in the portfolio? Well, I just bought one share before the reported earnings, just to see what's going to happen. And of course, the stock went down quite drastically. Well, not quite drastically, it's still performing quite well all in all, right? I think year to date, still up over 40%, so complete outperformance by Palantir, but it is back to around $109. Now, as for the other companies that already reported, I think I've made earnings review videos on all of them, so if you missed that, those will be in the top right corner. SoFi, great quarter, stock did not reflect that. Okay, it's fine by me. I mean, not fine by me because I would love for the stock to go up and up, but I have no intentions of selling it, so I don't mind waiting. For PayPal, here as well, a good quarter, and every time we had other fintech companies report, well, PayPal's quarter actually looked better and better. As for Alphabet, well, I don't really have to say much. By the way, today, at the time of making this video, the stock is down 8%. I did a specific video about that. Well, they got hit quite a lot because Apple said that they might be looking for AI-powered search. And they also said that their search volume is down for the first time in 20 years. But that's only a problem for Safari because they said that Google is still the best one out there. So I still don't understand this market's reaction. But okay, Uber reported pretty good earnings report as well. That video is up. So I'm quite happy, to be honest, with the earnings report for this earnings season. All in all, I mean, Tesla is still up since the lows. Despite reporting a horrible quarter, we're still at $273.5. AMD, this one is also a head scratcher, doesn't really move. But okay, I guess that's what happens when you don't really give us that much useful information in the earnings call. But okay, I think AMD is a triple-digit stock in the future. When will that happen? Remains to be seen. Nebius is up over 8% on the day after a report came out that Bezos Expeditions was leading a $73 million investment round in Toloka, which is one of the, well, sub-companies, let's say, that Nebius has. So the stock is up over 8%. And then as for the rest, we'll still have Alibaba to report next week, Rocket Lab this Thursday, I believe, dLocal and Micron, we still have time until we see those reports. And then at the end of May, we have Nvidia as well. Doesn't really matter much, it's just one share. Moving on to some other topics here, rate cuts. If we look at what's expected to happen in June, well, right now the probability of a cut is at 27.8%. That's down from 63.2% just a week ago. Now, whether or not the Fed will be late to the party yet again remains to be seen. If you believe the trueflation figures, well, then we are already sub 2% for quite a while. If they want to wait more, then I guess we might be seeing deflation or not. Remains to be seen, and that's why right now the probabilities are coming down because the Fed does expect more uncertainty. Probability of higher inflation and higher unemployment has risen as well. So that's why we see those numbers right now. We'll see. Anyways, moving on to the next one. More specifically here, Celsius. Revenue for the quarter decreased 7% year over year. North America is down 10%, but international is doing well. That's up 41%, but of course a very small base. Gross margins are up 110 basis points year over year. Net income was down 43% year over year, and diluted earnings per share was down 44% year over year. And this is basically what we're looking at on a trailing 12 months basis, revenue for North America and Europe. But we can clearly see that North America peaked here June 2024. I mean, if you expect Pepsi to order again, then we should be seeing a bigger bar in the next couple of quarters. If not, this of course does not look great. But of course, more recently with the acquisition of Alani Nu, that should help them grow again, but inorganically. Right now, Celsius and Alani Nu accounted for approximately 20% of total energy drink category dollar growth in Q1. Now, me personally, as you've seen, I still have a small position in Celsius, but to be honest, if the stock does go up and I am break even if the business will be doing well, I will probably cut my losses. Now, you might ask, why aren't you doing that right now if you think that there are better options out there? Well, if I did so, let's say a couple of months ago, well, I would have lost quite a lot because Celsius year to date is up quite significantly, outperforming quite a lot of other stocks because it was beaten down so much. I still think that there is opportunities here, and that's why it's still a small position in the portfolio, but eventually I will probably sell it and consolidate it into something else. Moving on to Novo Nordisk, ticker symbol NVO, net sales was up 18% year over year on a constant currency basis or 19% as reported. Operating profit was up 22%, net profit up 14%, and diluted earnings per share in Danish crowns, that's up 15% as well. And this is what we're looking at when we're looking specifically at the Ozempic revenue. Let me remove myself. They said the following: we have reduced our full year outlook due to lower than planned GLP-1 penetration, which is impacted by the rapid expansion of compounded GLP-1s in the United States. Probably a big win here for HIMSS, although for the people that want to take it, I mean, I found it very, very strange that you are willing to go with compounded solutions where you don't really know exactly what's going on there. But then again, it's up to you. You do whatever you want. Moving on to Walt Disney, a very good quarter by the company. Revenues were up 7%, income before taxes up over 100%, total segment operating income up 15%, diluted earnings per share of $1.81. Free cash flow did increase over 100% to $4.891 billion. Cash provided by operations is up 84% as well year over year. Looking at the different segments here, revenue from entertainment was up 9%, sports up 5%, experiences up 6%. If we look at operating income for each of those segments, entertainment is up 61% year over year. That's great to see. Sports is down 12% and experiences up 9% year over year. There was a big announcement made as well. This is basically the rendering of Disney's new theme park on Yas Island in Abu Dhabi. And the beauty of this all is that, well, Disney doesn't have to pay for it. They will license the IP, the ideas and everything else. But another group in Abu Dhabi will focus on capital. And to be honest, I'm very excited to see what's going to happen there. And to be honest, although someone told me that I should not be saying to be honest anymore, so I will not say it anymore, I am quite excited to see what they're going to do there because everything is very, very advanced. Every theme park, or if you look at Ferrari World, for example, it's pretty cool. So we'll see what they can do in Abu Dhabi that they couldn't do in Paris or in Orlando or in California. Which, by the way, they also said that they're planning to invest approximately $30 billion to expand its theme parks in Florida and California. And I do believe that I've read in the newspaper a couple of weeks ago. Yes, you heard it right. I read it in a newspaper. Who even reads a newspaper anymore? Well, I guess this guy right here, that they're going to invest in Disneyland Paris as well to add, I think, a Lion King place and something else. And so this is what we're looking at for Walt Disney. Over the last 3 years, we can see that entertainment revenue has grown at a compound annual growth rate of 5.7%, sports 6.2%, and experiences 8.5%. If we look at operating income, entertainment went from a loss to now quite profitable, I'd say, and experiences is back to where it should be. Looking at paid subscribers, if we're looking at Disney Plus, total Disney Plus, that increased just 1% year over year to 126 million. If we're looking at total Hulu, that's up 2% year over year to 54.7 million. Looking at the average monthly revenue per paid subscriber, Disney Plus is up 3% year over year. Internationally, that's up 5%. and domestically US and Canada, that's up just 1%. If we look at Hulu SVOD only, that's down 1%, and live TV plus SVOD is up 1%. Moving on to the big guy that reported Thursday after the market closed. Didn't make a video about that because, well, I wasn't available. So Amazon, better than expected results for the quarter. Guidance, especially operating income, was a bit on the weaker side. If we look here at AWS revenue, that increased 16.9%, so the slowest of the three, Azure and Google Cloud. And we have seen here a small deceleration from last quarter. Advertising revenue did increase 17.7%, subscription services revenue increased 9.3%, third-party seller services up 5%, and online stores around that same growth rate. Now, if we're looking at operating income, more specifically operating margin for AWS was its highest since 2014 at 39.5%. That was $11.54 billion for the last quarter. Internationally was just above $1 billion, and North America was $5.84 billion. If we're looking specifically to the advertising services, on a last 12 months basis, it's already at $58.3 billion and growing 18.5% year over year. I mean, how much would you pay for just the advertising side of Amazon? How much would you pay for just AWS? AWS probably $1 trillion, I'd say, right? I think that would be, let's say, fair-ish. So yeah, I mean, when you're buying Amazon, you're buying all of this and then some, because they're not talking here about all the robotic stuff that they're doing or Project Kuipers, etc., although some of the costs now are going to increase because of those things. But yeah, Amazon to me is still one of the best businesses to own in the market. Looking at Amazon's remaining performance obligation, mainly AWS, that is increasing as well, 19.8% year over year to $189 billion. Moving on to the last part, pretty repetitive from the video about Google, but if you missed that, it's basically this. This is the reason why Google stock went down on Wednesday. So Apple's executive Eddie Q says iPhone maker exploring adding AI search as queries fall. He said the following: Google remains the best search engine. Bing hasn't improved significantly, making it a poor choice for Safari users. Apple is exploring AI-powered search for Safari with potential partners like Perplexity and Anthropic. Talked a little bit about Perplexity Comet, their AI-powered browser that should be coming out later this year. He also said that browser search volume dropped in April 2025 for the first time in 20 years. Again, he's talking here about Safari, so it's bad for Apple, shouldn't really be bad for Google, especially not after the recent earnings results that we've seen from the company. Plus, this might be Apple and Google paying for the chess. Apple basically saying, well, look, Google might not be a monopoly anymore. There are plenty of other players out there, so drop the lawsuit, etc. On the other side, remember, if Google doesn't have to pay Apple $20 billion anymore to be the default search engine, there will only be one loser here, and that loser is not going to be Google. It's going to be Apple, because Apple is now getting, same with Samsung, billions of dollars, high margin dollars, because, well, they just don't have a competitive product. So Google is paying billions of dollars to be their default search engine. Now, if that's not the case anymore, well, that's $20 billion that Google can keep. Of course, there will definitely be an impact on usage, but Apple is going to be impacted way more because that's suddenly $20 billion that is not going to flow to the bottom line. Last two things here as I was finishing up, Mercado Libre and ARM reported earnings. Mercado Libre beats across the board, stock is up over 8%. These are the results. GMV is up 40% on an FX neutral basis or 17%. Items sold up 28% year over year. Net revenues and financial income up 37% year over year to $5.9 billion or 64% on an FX neutral basis. Income from operations $763 million with a 12.9% margin. Net income 8.3% margin. Total TPV is up 43% year over year or up 72% on an FX neutral basis. Maybe I'll do a specific video about Mercado Libre tomorrow. Right now, if you look at ARM good quarter, okay quarter, I'd say. Stock is down 8%. Why is that? Well, not because the results aren't good. Total revenue increased 34% year over year. Trailing 12 months non-GAAP free cash flow of $99 million. The results are fine. It's just that this stock is extremely expensive, has been like that for quite a while. We can see here that ARMv9 adoption is increasing. Why is that good? Well, ARMv9 commands a higher royalty per chip than prior architectures, and the adoption has started in smartphones and cloud compute. Now, this was always an issue for me. If I look at remaining performance obligations, with all the demand and everything that's going on right now, you would assume that this will go up. But no, here again, this was down quarter over quarter 4%. And so here again, I'm scratching my head and saying, why is this so expensive and where is the growth? And so all in all, that's about it. And as you can see at the end of this video, well, my portfolio is basically only down 0.03% during the day, was down 1% at the start of this video. Now we're flat. Who knows what will happen when you will open and watch this video. But anyways, that's all I've got for you right now. I'll be back on Sunday with the usual weekly portfolio update and then a couple of other earnings reports as well. Don't forget to like and subscribe, and I'll see you all in the next one. Bye-bye.